Hello there, traders. Welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. I'm going to take you through the latest news. Sorry. I'm going to take you through the latest news in the markets as well as some charts of interest. Today, we're also going to be covering what a hedge fund's doing. Where are the commitment of traders showing us where smart capital is parking their cash? That's what I want to know. So we're going to go through that very, very quickly today. I've got to shoot off, so I can't stick around too long today. But we're going to go through some of those key concepts. So let's start off with the news. You know, what's been going on overnight. Now, there's something bubbling away, which I think we need to keep our eye on, right? So first of all, the tension between the US and Iran starting to escalate again. US Treasury sanctioned nearly 60 Iran-linked entities, people and vessels across nuclear, missile, cyber, and oil networks. And US President Trump is making calls to world leaders to cut economic ties with Iran that the US expects actions from other nations. And if others do act, the Treasury will unilaterally act. US Treasury Secretary Bessent said there will be a wave of sanctions after this, with a major financial institution expected to be sanctioned by the end of the week. Following on from that, it says Iran's economic minister said the country is fully prepared for US sanctions and that they cannot cut off Iran's financial arteries. So, big story is we've got this going on. Going into tomorrow as well, we have the US core PCE. I've done a preview of that decision. You can also see it as a YouTube video too. And I'm going through what are the key things to look for going into tomorrow's core PCE. But this is another big story that we really need to keep our eye on. And I think it's going to have a real strong impact on those oil prices. So what I'm doing, I'm just going to create an oil chart here on MetaTrader 4, okay? And we're going to have a little look at what the market is up to in that sense. So let's go and get our oil. You can see we have XTI here and we have XBR. We're going to be looking at Brent crude oil, okay? So let me just grab those in here, okay? I'm going to have a little look at where the pricing is, because I just have a strong feeling that this market is not going to stay down. The escalations are obviously growing between the US and Iran. And that to me is a strong sign that we're probably going to see some further upside. So we're on a daily chart right now. Let me just get rid of the period separators here. And what I want to look at, let me just also get rid of a couple of things and then I'll just re-add it back on after. So let's have a little look at our adjustable market profile tool. Just add that to the screen. And I also want to add in, we'll add in the IB dashboard as well, just to see what's going on lower time frames. So what we've got at the moment is obviously we've had a bit of a obviously rocky time, right? The market has been very bullish since the Iran war, right? Let me grab a tool. Since the Iran war, we obviously then had the idea that peace was coming and there was going to be a deal, and the market shot to the downside. Now we've had re-escalation. So this is where the bombing started, and we had like 14 consecutive days of bombing. We then had a deal potentially being made. Markets moved lower. Then Iran said, no, there's no deal going on. And now we're getting escalations on a economic front. Very different to the bombing front. And I think that's because obviously President Trump is going into the midterms, so doesn't want to, cause too much damage to his name at the minute. But to me, this is an idea that we could see further upside. And what I'm really eyeing is this gap that was created, right? Back over here on the 22nd of May, the price gap down from $105 down into sort of this, what is it, the 100 spot 20 handle sort of area. So that area there, for me, could be a target for price going forward. So that's something I want to be looking at. I want to be looking at potentially targeting it up in this area. We also have to be aware of what's going on in terms of our key levels of interest. If we just look at the market profile from the swing high down to the swing low, we can see that there's obviously a very evident pocket of low volume in and around that area as well. So that to me is a good area to target. Could be in sort of like the edge of the ledge there. We're also kind of trying to trade back into that value area too. Now, if I look at this from a monthly point of view in terms of price action, and we have a little look at last month's price action on the month using this daily chart, we can see that obviously there's going to be an area of resistance up at 95.88 because that is the swing highs of July and is also the value area high as well. So that area is going to be of importance too and could be our sort of first target for moves higher. I just can't see how this market doesn't push higher with the escalations going on. Now, if I use the market profile again and just expand it from that same low across to current price action, we can see that we have a edge of ledge around about 90.72. That to me is going to be a potential entry point for me if price comes down, because it's not only just a low volume area, it has previous structure highs there too. So that to me could be a point of interest. Let's go to our lower time frames. Let's go to the 30-minute time frame here. I don't know why my initial balance is looking like that, so maybe I'll just get rid of it. Indicators list, get rid of the initial balance area, right? And let's go to a 30-minute chart. Because, you know, if we're looking at it in terms of trend, right, let's just break it down in terms of trend. Look at the daily chart. The market is making a new higher high, higher low pattern. So it's in a pullback phase. It's in the phase two. So remember, we talk about phase one is with the trend. Phase two is against the trend. Phase one with the. Now, I look for when the phase two turns into the phase one and look for opportunities around that. So what we can see, or what I'll highlight to you, is the previous time we had that phase two, which was here, right? Which was the 12th of August candle and the 13th of August candle before the 14th of August closed bullish. So essentially, if we go down to a 4-hour chart, even an hourly chart, right, you'll see that in that pullback phase there, let's get rid of those period separators, we can see that the hourly chart started to form lower lows and lower highs, right? Once that stopped and we started to fail to make new lows, we consolidated, we broke out, the market started to rally higher. That's what I try and get on the back of. And there's multiple ways that we can do this. We can either wait for a breakout of significant highs to wait for the confirmation, or we can start adding in a little bit early. So one thing I like to do is use counter trend lines, pop that on the minor downward trend that's forming. And when we get a breakout of that, that's our first entry, right? Stop loss below the swing lows. Look for second entry at potential volume areas. So potentially back down towards this low here could be our second entry. Third entry could be on the breakout. And then look for that continuation move. So that's what I'm looking for here. Again, if we look at current price action and we look at the hourly chart, market is making lower lows and lower highs, right? So we need to see price break out of that trend in order to be a buyer of this market. So if I draw a trend line from the swing highs, right, we can see that we have a nice trend line move down through here. Second thing we can look for is obviously for price to almost like change trend. Okay, so if it comes down into this 90.76 area, rejects it, breaks out of the trend line, I can look to go long one, break out of highs, long two, long three could be on an area pull back into some kind of market profile level. Okay, and when we look at the market profiles at the moment, they're obviously getting lower, right? And that makes complete sense because price is moving lower. Right. And this is the one thing I like to show you guys as well, and why I use market profiles, because it can show us just some hidden levels. So if we look at oil here, look at this low volume pocket, right? On yesterday's price action, came right up into it, rejected it, sold off, right? I like to look for that. I like to look for point of controls. I like to look for high volume, low volume areas. Now, if we look at yesterday's price action, look what happened, right? Price broke out of that consolidation area, came up, retested. Where did it retest? Got to low volume, just under that point of control, sold off. So I want to see that start to change. I want to see price break through these areas of volume, break through these key points, and then we can start looking for long ideas on oil. But that's one market I'm very, very focused on right now. I feel like we could see some upside in oil prices. I'm going to be keeping an eye on this on a daily basis. And essentially just looking at the daily closes can be enough. You know, if we get like a push today into the 90.75 rejection, then I can start looking for potential long ideas. But I just don't see this escalation going away without some kind of, not I want to say explosion, but it's almost like it's bubbling away at the moment. And I think there's going to be a big catalyst. Either, the sanctions come in, and it might be the fact that this is the bit where Scott Bessent says, Secretary Bessent says, the institution expected to a big major financial institution is expected to be sanctioned by the end of the week. That could be the catalyst that really pushes things for us. And obviously, we don't just have that. We have core PCE coming up. We have what else do we have? We have the Jackson Hole Symposium coming up as well. GDP data, loads in the mix this week, and I think that we could obviously see a little bit of potential upside in this. I think at the moment, obviously, the dollar's pulling back a little bit stronger, so it's given this little bit of a pullback. But I think it's just a breath. I think it's just a breath before we see the potential breakout. So that's definitely one I'm going to be keeping my eye on. I'm actually going to save that as a profile of MetaTrader 4 as my Brent crude oil chart. Okay, so interesting one to watch. Now let's take a quick look over at our chart of the day before we move into what the hedge funds are up to. So let's go into the chart check. We're going to be looking at gold. All right, gold starting to reject these key levels now, and it was likely to come. Okay, we started to see some US dollar upside. If I just flick over to the US dollar index really quick, you can see that we're in that phase 2 pullback. We spoke about this in the video yesterday. If you've not seen the video, go check that out. But we talked about the idea that the market is in this pullback phase. Do I think we're going to see an extension? Yes. And a continuation of the dollar bearishness? I do. But the markets don't move in straight lines. They kind of, pull back. And when we have heavy news weeks, it can be pretty positive for the US dollar. We can see that it's dominating against the likes of the Japanese yen at the moment, which isn't good for my short positions right now. But we're seeing that pullback. Dollar Swiss had a really aggressive move down. We're starting to recover that a little bit, but I like the short here if we do see the continuation of the situation with the yields X, Y, and Z. So we'll keep an eye on that story as well. But going back to gold, and what we have here is the price of gold and some levels that we pointed out. So right about the 4,700 handle, we pointed out this large volume area. Okay, so I took a market profile from the swing high of April to the swing low of June. So basically from the highs of around about 48.90s all the way down into the 39.70s, right? And what we noticed were these key areas of support and resistance, right? So you can see how the market has kind of broken through those low volume areas and then gone through the high volume, used that as kind of like the edge of the ledge, and then the market has continued to drive to the upside. This is why I love using levels like this, because it shows us those kind of hidden levels. Now, looking at this, we can see price came up into that level there and has started to reject. So this could be where we start to get the phase 2 pullback on gold, pulling back into key support points. So where are those key support points? Well, we can either use this old market profile here, or we can start adding in new ones, right? So I'm going to go from the swing low down to the current swing high. Let me just pop this over here. And here we can see, obviously, the market has a lot of low volume levels through it. Now, the biggest volume is going to be down at this 44.25 handle, because the market spent a few days here before we broke higher, okay? But we do have some volume kicking up around about this $4,500 area as well. So that could be a target for us going forward, which would be nice because we also have this trend line support going through there too. So we've got a bit of a double area there that we can look at. So what I'm looking at is, what I need to see anyway is a change of trend. So again, let's go down to our lower time frames. Can we see anything? Well, we have the hourly chart and the 4-hour chart forming a double top pattern, right? So if you look at the hourly chart, market has formed a double top. We've broken down through that and we're consolidating. This is exactly what I like to see. So one thing I'm going to be looking for potentially today is a breakout of this consolidation, a pull back into it, a rejection, and a move down towards that 45.80. And if it continues down to 4,500, then that'll be something I'd be very, very interested in going forward. If I add in a market profile and just have a little look at yesterday's price action, we can see that obviously the price action very much contained within this area here. Look at that. Value area low is finding support at the moment. If we break out of that value area low, look for the retest, look for the continuation to the downside. Again, let me add some market profiles on here so we can look at the key levels to watch out for. Obviously, that 45.84 level is going to be pretty important because the 21st of August, it's the point of control that's untested. So for gold, I'm looking at that consolidation at the value area low. Might push up a little bit higher and then break down, retest into that 45.83. That's what I'm going to be looking for with potential shorts down into this level here. Okay. So let's talk about the final thing. The final thing that I wanted to talk about was the hedge funds, what they're up to, what are they buying. So let's go over to the commitment of trader reports. I'm going to go over to the study of this. Let me just go to futures, commitment of traders reports. Sorry, I need to go to the legacy report. We're going to go on to non-commercials, okay, and we're going to have a look at the summary report. So what we're going to be looking at here, or what barchart.com does, is it puts it in a way where we can look at the net positions on a 52-week range, and it also shows us what we can see the hedge funds are buying. Now, we like the idea of being long crude oil. Look at crude oil WTI on the futures contracts, right? They added 22,894 longs, right? And they did that by reducing their short positions by 17,000 contracts and increasing their long positions by 5,000 contracts. So net, so that's the difference between the longs and the shorts, it's a long position of 22,894 contracts. That to me is quite significant when we look at the grand scheme of things. Going down into our currencies, or even gold, for instance, look at gold as well. Out of all of them, we can see that they've added 4,249 long contracts this week, and they've done that by adding into their long positions. They've also added some short positions, but not as aggressively as long positions, and that's 4,249 on the long side of gold. Now, like I said, let's go down to what's going on for currencies. And we can see that there's been some big changes. One of the things that I've noticed is that they've added aggressively into their Canadian dollar longs. And if you look at what's been happening to the Canadian dollar, we've been talking about buying Canadian dollar for a little bit now because of this extreme short position that they held on a 52-week range. Their net positions on a 52-week range had reached an extreme level. So I was looking for that to unwind. It has unwound and dollar CAD has fallen. Bit of tariff situation going on now in between the US and Canada. So that might weaken the Canadian dollar a little bit, but that could help hedge funds fund that essential buying of the Canadian dollars, which is what we're seeing at the minute. Japanese yen decrease those positions minus 10,880. They've done that by adding in aggressive short positions, decreasing their long positions. So not good for my Japanese yen trades, to be honest, because Japanese yen is starting to weaken, and it was also reflected here by the commitment of trader reports. Another one that we were really interested in was buying euro. against the US dollar, which has also played out really nicely over the past few weeks. And that is because we had an extreme short position that was being built up by the 52-week range of the non-commercials, the speculators. Now, they're not really doing too much here. They've added 922 long contracts, pretty neutral, to be honest. Nothing aggressive going on at all at that point. So nothing really to report there. But the big ones really, obviously, is that Canadian dollar and that Japanese yen. Very, very significant changes to those. And, that means that we could potentially be looking at that CAD yen long position, right? So we'll go back to the charts here. Let's go back to default and let's have a look at CAD against the Japanese yen. So if I can find it here, there we go. So CAD yen could be one to watch going forward because, CAD yen's ripped lower because of the, let me get rid of that initial balance dashboard there. Has ripped lower because of the situation with tariffs, but that could be a golden opportunity. Look at this daily chart, right? Market is making higher highs, higher lows there. This was the, let me get the color right there. This was the intervention candle, right? This big one here, aggressive drop. Market has recovered, making higher highs, higher lows. Now, look at the daily chart. It's in that phase 2 pullback. But if we go to the hourly chart, what's going on? Okay, we've got our first sort of potential opportunity here. The market has broken through a trend line resistance. What do we have now? We have consolidation. Okay, so we could ultimately be a buyer of CAD yen. So maybe we can hedge our position a little bit here. So if I was to buy CAD yen, put my stop loss just down below this, I'm going to put it down below this spike here. I think I would usually put it below this low here at 25 pips, but let's put it there. And I've used $100 of capital there. So I've still got another $150 to play with. If we get a breakout of a swing high and a close above, which is going to be that candle there, then we could look to potentially add into the position. So I'm going to set an alert around about 115.10. And if we get a close above that, we could be looking for a continuation. So I'm going to be a buyer. I'm going to look for a potential 2-to-1 returns at least. I mean, we could probably go a lot higher than that. Look at that intervention. I mean, if it recovers the intervention, that would be incredible because that would be, at least a 4-to-1 reward to risk ratio. But I'm going to go for a 3-to-1 because obviously if it does start to move, I'm going to be looking to potentially add into this position if we do see a breakout. And then what would be nice here is if we did get that breakout, we've almost got this consolidation that price is working in at the moment. So if it breaks out of that consolidation, retests, we could see a move to the upside. I have another alert going off, and that is probably what was that one? Was it pound US dollar? Euro dollar maybe? Let's go and have a look. Might have been pound. We've got a normal variation day on pound, so might be looking for a little bit of a breakout to the upside on pound. Still very bullish this market as well, but again, it's coming down to the overall trend of the market. And do I want to be a buyer right here, right now? Probably not. But like I said, we might see a breakout like we have there on the hourly chart. That might be the long that markets are searching for. So guys, I'm going to leave it there. Thank you all for watching today. Hope you enjoyed it. If you did, leave it a thumbs up, subscribe if you're new, and I'll speak to you very soon.